Yeah, good morning. Thanks, Matt, for having us on this Crux interview panel. I'm Marc Henderson. I'm CEO of a company called Laramide Resources. We're listed in Toronto. We're also listed on ASX and OTC Bulletin Board. We've got two very large development projects, one in the United States, one in Australia. And we're very happy to see we're sort of in the late stages now of development, and with a better environment coming on, we think it's an ideal time now for companies like ours to sort of get moving more rapidly to sort of filling this massive deficit in supply that everyone seems to have a consensus now that is building and probably is going to be here for the next decade or so. So it's a very good time to be looking at uranium companies in general, and we think our company specifically.
I'm Ted O'Connor. I'm Executive Vice President with American Lithium. We have two lithium projects, one in Peru and one in Nevada. But I'm here to talk about our big uranium project also in Peru, in southeastern Peru. It's a large resource, and we're dusting it off and pushing the Peruvian government to come up with some export regulations. So exciting times in a country that has no other uranium resources or production currently.
And I'm Chris Frostad, President and CEO of PurePoint Uranium. We're a uranium exploration company operating our 12 projects in northern Saskatchewan. And like our other guests here, we're all quite excited about the attitude towards uranium these days.
Absolutely. And we're going to get there, but I can't not ask Marc Henderson his view. Sabotage accusations being thrown around left, right, and center about Nordstream 2. Who done it, Marc?
I'm not sure I want to go there, but I mean the ramifications and the follow-on effects from this energy crisis market, which I've been on your segments and show a bunch of times here now. I've been talking about it for a while, about this thing that's been kind of the slow wave rolling in. This energy crisis has been building, and it's just gotten worse and worse. This sort of takes it to another level, just because, irrespective of who did it and why and everything else, the ability now to fix it and to fix the European gas problem is really, really going to be difficult. There's only so much LNG you can get it, or so many molecules you can get in with LNG. I mean, you had a pipeline that obviously could have resolved the energy crisis pretty quickly there, and now that won't. And I got to think that's going to put massive pressure on gas prices everywhere else, including America. So, we already have gas prices here at prices we haven't seen in a decade. So I just think this whole energy crisis market rolls on, and this just made it worse.
Well, it certainly does. And, the geopolitics involved with uranium and nuclear has been going for some time. Now, Ted, your big project, Macusani in Peru, you're going through a bit of a sticky time there yourself, aren't you, with the government? So are they pro mining? Are they pro uranium? What are the problems you're facing?
Well, the problems seem to be more government structural. The support at the federal, we'll call it central government level, is there for both uranium and lithium, two commodities that the country currently doesn't produce, and we're the only company that holds either of those resources, and so we're getting good support. It's the revolving door in the mining ministry. We've had 6 or 7 mines ministers in the last couple of years. It's really ground the permitting process to a halt. And so if you're a producer in the country, you're doing great. If you're an exploration stage company that wants to put some holes in the ground, it's been a real struggle, exacerbated by COVID.
Well, I think that's the same the world over in most jurisdictions. I'm not sure Tier 1 jurisdictions exist anymore. And talking of which, Chris Frostad, you may be in the Athabasca Basin, you may think you get a free pass, but you've got Trudeau to contend with. How are things in Canada when you're looking out at the rest of the world?
Well, yeah, I think what's different right now with all the strife and activity that's going on in the world, it's changed. It's actually heightened a lot of the activity. That is to say that I think we've always looked at nuclear and uranium globally in terms of supply and demand and where it's coming from. But we've always recognized that geographically, it doesn't work out that well. The people with uranium aren't necessarily the people who use uranium. So, Australia, Canada, Kazakhstan, sure, we've got lots of uranium, but the people that need it, China, the United States, what have you, they don't necessarily have those resources there. So now with a lot of this activity and a lot of these problems arising between countries and throughout the pipeline, the whole fuel pipeline, that's now become another factor. We can't just rely on the amount of uranium there is in the world to run the amount of reactors around the world. Now we've got to be a lot more focused on where it's coming from and whether that supply is going to be whether we've got surety in that supply. And I think Canada continues to be fairly open and neutral in terms of our availability to sell into most markets.
Yeah, you make quite a good point there. The irony is not lost. I mean, Australia, Kazakhstan, and Canada without nuclear, but they sell a lot of uranium. Marc, back to you here on with regards to this U.S. attitude to you like us here in Europe, suffering from energy crises, costs going up at the pump, going up at home, disposable income, discretionary spend down. It's not a nice time to be to be running a household at the moment, but you must be getting some signs of encouragement from the US government. We had Dr. Catherine Huff over here at the WNA a few weeks ago talk about the need or the desire to double the amount of nuclear energy in the US by 2050. How are they going to do that?
I frankly hadn't heard that. I mean, there's obviously a very active debate about all things energy related in the US and North America as well. But the nuclear piece of the US has been pretty stable at, I don't know, 15% of electricity generation, something like that. And there's been the industry, starting with the utilities as well as the producers, have, gone to Washington to try and get various things happening, going back to that whole 232 exercise on the producer level a few years ago. That eventually morphed into there actually being legislation that was passed about creating a uranium reserve, which is kind of the equivalent of the SPR for uranium, so that they'd have the inventory. For whatever reason, the current administration has not actually put that into effect. It's up again for grabs every time there's a new bill that's running through Congress, including the one to keep the government alive, I think, which is today. They got to do some continuing resolution or something. And whether that makes it or not, I don't know. So there's a lot of talk about it, but the reality is in North America, and I would include Canada in that too, we're fortunate in this energy crisis in that we have lots of molecules and we're going to be fine. It may be expensive, but we'll be fine. The bigger problem is really in other parts of the world. And I guess the issue for nuclear, when you want to put your hand up and say, hey, we can be part of the solution, is it's easy to kick it down the road and say, oh, that's, it's a 20-year thing. It's a long lead time. But, had some of these governments done what they could have done 10 years ago or 20 years ago, we wouldn't be talking about this right now.
Well, that's true. I think a big part of the conversation at WNA was the need for governments to kind of get out of the way of themselves with red tape and licensing and permits and to allow this thing to happen quicker in half the time. But just want to stick on the US component, which is and the investors watching and listening to this want to understand that how do companies like you take advantage of what's happening there in the States? For a start.
You asking me specifically?
Yeah, please.
Yeah, I mean, I do think that what you need more is a sense that all of the political parties and everything get behind you, so that you don't have the frictions about bringing projects along, because it's the permitting and the Ted talked about Peru, and it's a new thing being introduced into Peru, so the anti-nuclear people will get in there, and there'll always be people that don't want the mining. And so you've got all those kind of frictions that happen as well. You really sort of need a consensus built deeply with the public that we sort of have to do this. I mean, the Americans did it before when they had an energy crisis in the 70s, and they just kind of got on with it. And, 100 reactors showed up 10 years later, and then France the same and Japan the same. Whether we get to that kind of thing again, I don't know. But what's happening is forcing people, the public, to get educated in a hurry, which is great. I mean, so yeah, I think, we're patient. We're in uranium. We're patient. And so we wouldn't be here if we didn't think the public would get the answer right in the end. And so I do think we're much closer to that day now than we were.
Yeah, I think that when you add in the net zero component and any credible model that's out there, whether it's the UN Economic Commission for Europe report that just came out, the secretary you talked to from the U.S. government, during the WNA. She had a great presentation there. And every credible source says nuclear has to double to get to net zero by 2050. And if you add in potential hydrogen byproducts, it could be tripled. Now, how we get there is another story, but it's clear the need is there.
Right. It's about the energy return on capital invested. Absolutely. In terms of base load, it makes sense. The green component, it makes sense for sure. But I just want to stick with the kind of jurisdictional component. And, the US has its nuclear policy, but I think I guess if you're in Peru, you're hoping US stands for us, friends of the US. How does an asset like yours get itself a kind of buyer in the market or support in the market, which will kind of influence Peru's attitude to it, given it's a kind of nascent industry over there?
Yeah, so the government has some regulations in draft form that were a combination of Peruvian legislation, because they have a small research reactor, but they also dealt with the Canadian and US governments to formulate the regulations. Because yes, you can mine uranium, yes, you can produce uranium under current regulations, but it's the whole piece of, as far as the regulatory system and people, the infrastructure to regulate, to export uranium around the world to, obviously, United Nations Non-Proliferation Treaty people, signatories. So Peru's in the UN. They're founding member of the IAEA, International Atomic Energy Agency. The global regulatory agency for all things nuclear. So that's all in place. It's just a matter of the regulations, and with the help of the Canadian and U.S. governments, I believe it's hoped that our products go to friendly jurisdictions.
Right, and Chris, you look at Athabasca Basin, renowned for the highest grades in the world, mining made easy, right? But you are in Canada. You have First Nations issues. You've got environmental issues. You've got permitting times and licensing times famously long. Do you see that changing anytime soon? Given the environment we're in, will there be pressures on Canada to perhaps help speed things up or make things a little bit easier, or is this just the face of mining as it stands now?
No, I think certainly, and a lot of it goes back to what Marc was saying about the whole education piece. I mean, the public is becoming more accepting and understanding of nuclear power and where it comes from. I mean, yesterday, Ontario announced that they're going to leave our Pickering reactors open now for at least an extra year and maybe another 30. And again, the people against that come out of the woodwork, but their arguments don't sound as solid as they might have 10 years ago. They're not as scary as they were 10 years ago. And they're not getting the support they did. So I think the education piece is huge, and the fact that the population now understands it more, they understand the issues of it more, and the safety issues and the fuel issues. So that certainly helps everything. But Canada is we've always been a country that digs stuff up and sells it to the rest of the world. And I think there are a lot of conversations going on now to make that easier, be they in Europe or England or anywhere, to make sure that we can, we've got those commitments to provide resources and in the way of energy, be it oil and gas or uranium or whatnot, and which then backs up onto us. That means we've got to start making it available quicker. So there's a constant constant rumble out of our industry to streamline things more, and we do see it happening. We've seen it happen over the last 10 years. It's never fast enough for our liking, but I certainly see that there is an attitude towards getting a lot of the problematic issues out of our way.
Okay, I think you missed a chance there with Pickering to talk about a can-do attitude in Canada. That's a uranium joke, folks. Nuclear. Marc, with the market, so there's a will and hopefully a way for nuclear and uranium. Politically, that narrative has changed. As you said, Chris, there's the retail audience, the everyday people are now starting to talk about and read about nuclear as a solution, and it doesn't have that kind of pushback that it once did. So let's park that up. Let's talk about the current economic environment. Okay, Marc, it's tough out there. It's been tough out there for 10 years for uranium. Are there green shoots appearing? Will financing happen? Can small projects survive?
Oh no, I absolutely think so. I mean, I think the capital I don't think is the issue for the, it's a small universe of companies, our universe, including all the explorers, et cetera, that have projects that look exciting and can one day, meet the demand. It's again this sort of price signal response you need. I mean, there's certainly all the folks that have real projects and things that are worth pursuing. I mean, they're all reasonably well funded. I don't think they have any issue getting funded. I mean, uranium is energy. It's joined to this bigger energy thematic in terms of capital. It's probably the strongest segment of the market, to be honest. And my personal view is coming out of this bear market, that sector and maybe a few others are going to be the new leaders as opposed to the leadership from the last bull market. But you really need the utilities to kind of join the party, because at the end of the day, and we talked about, the legislation and this kind of thing, the utilities are very good at looking after their own interests, and they really don't worry too much about whether the producers make money or don't make money or what the uranium price is. Their effort has been entirely focused in the last 12 months, I would say, especially with this emergence of this conflict, has been on the enrichment piece, because that's the vulnerability for the West. Chris alluded to it earlier, the two worlds are coming apart, and you better have a separate supply chain about how you're going to fuel all your own reactors and get conversion and enrichment. And the tightness in the market really started in conversion and enrichment, and I think it's going to trickle down eventually to uranium. But the lobbying and stuff that they're doing over there is basically mostly derived towards things like enrichment at the moment.
Yeah, and I think we're seeing definitely that the to your point, Marc, is that the fundamentals are still solid despite what's going on in the general markets right now, and as much as uranium companies have suffered somewhat over the last month or so, I think they've held stronger than most, and the money is available and has been available for the last year or two, which means we can all get back to work. And I think it's important to also understand that I'm in a very different business than Marc is. Right. So the value proposition to shareholders at a Laramide is that a lot of the risk points, the projects have been de-risked and they're now heading towards production, and that's one value proposition. Our value proposition is on the other end of the scale. We're in the business of making discoveries. That's where our shareholders see their value, and we can only do that with availability of capital, and capital becomes available when the general markets and the general sector becomes happy. So, we've got two different value propositions for our shareholders, and right now ours is enjoying what's going on in the markets as well.
Yeah, to go back to Marc's enrichment comments, what I think people are losing or have lost in this is that the enrichment underfeeding has basically had 20 million pounds of uranium coming in that doesn't come from a mine. It's a secondary supply. And so what we've seen since the Russian invasion of Ukraine is the Western world enrichment is not overcapacity. They're actually overfeeding now. So you're going to see that gap between primary mine supply or potential primary mine supply and demand growing, especially Western world. Because Russia doesn't export any of their uranium. They export their enrichment capabilities. China is self-sufficient, so there's only a handful of places in the world, Western world, that have enrichment. And you're going to see it trickle down to the uranium explorers, developers, and producers.
40% of enrichment. So it's a big chunk. I don't think there are any sanctions on it yet, but that's a come. And if there's a backup solution, I hope no one rushes into that decision. Just on the, just if you want to go there, then that's fine. I was going to go somewhere else, but in terms of the demand supply fundamentals, we've talked a lot over the last year about US. You might know a bit more about this, Marc, and probably you too, Ted, with SMRs going into coal-powered fire stations, i.e., kind of sort of plug and play. The infrastructure's there. Why not? So the demand and delivery mechanisms are there, but what does that do on the pressure for supply? Does it make it easier in terms of the fact that the momentum is there and therefore the sentiment is there for money when you need it, or not? What do you think, Marc?
Well, that's a very interesting area, and Ted and I were both at WNA. Actually, we had a good chat there about various things. I think we probably talked about SMRs as well, and there was a very interesting panel at WNA about SMRs that included a couple of the different entries that are sort of trying to be the leaders in the technology race, if you will. I look at it as kind of a shiny new object in the space, which is helpful probably to get people to say, let's have another look at nuclear. Nuclear's in the conversation and everything else. The reality from a market reaction, price wise, and all this kind of thing, to me, is something that is probably really a 10-year out kind of thing. And then obviously it will affect market dynamics depending on what kind of reactor designs there are, whether you use the traditional low enriched fuel or higher enriched fuel. And they've got a long way to go because they've got to go through a whole licensing process. You've got competitive technologies. They all have to go through a licensing process before any of them are approved. And at the end of the day, as the folks that were involved in these projects were telling me, at the end of the day, you're running a little mini nuke there. And so you have all those issues that go around that no matter what you do in terms of getting the CapEx down and the speed to market down. So I think it's a fascinating area. I think you're going to hear a lot more about it. I think it's generally good for the business, but the real impact, honestly, is 10 years out to me.
Yeah, I agree with that. I think we're working at it. It's helping the dialogue around nuclear for sure. I mean, Ontario's got a one going into presumably commercial use in a few years, but it's about the dialogue. People can understand this. It's something simple that the public can grasp and say, okay, these things are smaller, neater, cheaper, easier, hopefully safer, and it helps that dialogue along. The actual practicality of it may be a little further out than people realize.
But what is the thing that's going to get this going, right? We've had, since we've been talking, or we've come back into the nuclear and uranium space, loads of catalyst points, starting with the Section 232, which Marc referred to earlier, and and then it was the Russian suspension agreement. Then it was Sput coming in. Then it's just like a series of catalyst moments. People desperate to believe that there was something that was going to radically change the sector. It's an opaque space which not too many people understand or have the data for. So what is the thing that's going to get this moving? Ted, what do you think?
I think it's the actually starting to publicize some of the long-term contracts that people are negotiating that are off market. I can tell you that Cameco wouldn't turn on McArthur River again, like they're doing right now, at $48, $50 uranium. That's just reality. That was stated several times by my hockey opponent, Tim Gitzel, here in Saskatoon. So I think once the utilities and the veil gets lifted on some of these long-term contracts, you're going to see that the spot price is relatively irrelevant.
Right. So, Marc, I'm going to come back to you because Chris made a point. You're all at slightly different stages of evolution, and you've got to play the market differently, right? To kind of be able to move forward. For you, being US centric, obviously you perhaps think that you've got an advantage over most groups, but how does your company move forward? Because one of the quotes I remember when I was at WNA too, we spoke to utility there, and it's like they go, well, do you know what? 50% of these juniors will never get into production. We are discounting that many. So how do you stand out and go, we'll be just fine, and we're one of the 50% that will?
Sure. Well, that question you asked, Ted, was kind of a bifurcated question about what would get the market going. Well, what would make the companies succeed, or as businesses, or what would make the stock succeed? Well, obviously, what makes the stock succeed? Everybody's this has been a thing that's been financed by hot money a lot. And when it's hot, it's really hot, which is why hedge funds and people like it. So as much as the term market really does matter to the business side of things, the spot market's kind of what makes the stocks go. And so that'll be what really sends the stocks rocking again, will be when you get that market visible and moving. What gets the business going, though, is what Ted said. You really need that stability of price around, let's say, $50 as a floor, which we don't have yet. I mean, that's the reality today. Is we thought we had it, ran up to 65, pulled back. And now everybody's scratching their heads and wondering, where are we going from here? But as businesses, no, I think at $50, people like us that have a thing that should be brought to market relatively, ISR, the benefit of it, especially smaller projects, let's say that start at £1 million a year, at $50, you better be able to bring your project to market. And you should make money, and you should be a real business like other businesses. And, the thing that got the oil stocks jazzed up is people realized what a good business they were when prices were high. And suddenly these companies that were bankrupt on paper 12 months ago are suddenly paying special dividends. So they are real businesses at the end of the day. That we haven't had a cycle in a long time where you had new entrants that came in, other than Kazatomprom, which by the way, if you look at that, spectacular business. And what we need is a few of these North American ones that and listed companies in our sector to come along and demonstrate that they too are great businesses. And I think that can happen in the right price environment.
But don't you need in the US some kind of roll up? Because there's lots of small projects, no big ones, benefiting from, scale. Do you expect there will be M&A? I mean, do you want to do it? Do you want to be part of that, or do you think you got to look after your own business?
Well, I mean, the roll up, once you get past two projects, I mean, I think the thing that you want, I mean, we've always said you want to build a company that's attractive to the utilities, and you need diversified security of supply so that they know that they make a contract with you. They don't care which mine it came from. But realistically, a developer is not going to develop two things at once, even if they had the world's greatest portfolio. So once you get probably beyond a pipeline of 3 or 4 projects, to me, the roll-up thing from a business standpoint starts to make less sense. So you'd have to be doing M&A for a different reason than that. Whether it's to get bigger because you want market cap for passive flows and things like that. But once you get beyond the ETFs, you're basically into things like TSX indexes, ASX indexes, things like that. So yeah, there's some that does make some sense, but I think at the end of the day, what we really need to see is some of these things get going, and they are going now. There's a couple of projects now that have been around a while that they're going back into production. They're financed, they're on track. They're going to deliver uranium, I think, in 24. So yeah, I think as you get more into that, and those companies become attractive acquirers because they've de-risked their thing all the way to the point where you can say that, hey, your project works. The M&A thing at that point gets more interesting.
Yeah, well, I think the scale, the M&A thing, it would probably bring back a conversation which was their accusation against Kazatomprom that they were controlling the price downwards. We've been party to sort of conversations recently about, well, how do you actually get this so you can control the price upwards? Because the utilities seem to have it's a buyer's market, has been for a long time. How do you change that? I'm not sure anyone's got an answer for that. Chris, if we look at you, Chris, you've got a different game afoot here. This is exploration, high risk, high return. You've got to be able to raise money, drill, repeat, right? Repeat, step and repeat. That's the name of the game for you. But what's happening there in the Athabasca Basin? Are you seeing a lot of new entrants come in here? Perhaps cannibalizing a lot of your potential investors. Are they doing it the right way?
Well, I don't think they're necessarily cannibalizing all the investors. They do muddle up the market a bit. I mean, our objective, as I mentioned before, is not to produce and sell uranium at the end of the day. Our job is to find uranium and let the Marcs of the world actually determine whether they can haul it out of the ground and make money on that point. And, you look back on the last 4 resources that were identified in the basin, and they're, delivering 10 times return or 100 time return in one case, and close to 500. But we're in a different sector of the market. So we've got a different value proposition. All the people that made money on NextGen after their discovery, they're not shareholders anymore. They made a lot of money and they went away and they've done other things. They weren't going to hang around for 10 years and wait for to see how they made out as a mine. And that's so we are in a different business. And I think one of the things that we do see kind of confuses the market a bit is first of all, we're all talking about the same fundamentals. So you can confuse an explorer with a developer and think you're making the same bet, but you're not. And then the other thing is we've got explorers running around out there talking as though they are developers, before they've even got a deposit under their belt. They're talking about how they're going to process it and the metallurgy, et cetera. So that confuses the market up a bit. I think for us, it's making it clear that we are an exploration company. We have a mandate to maximize the likelihood of a discovery, because that's what we're in the business to do, and those are the boxes that people should be looking at when they're looking at explorers, which are different boxes to look at than if you're looking at a developer.
Fair point. I mean, Ted, just for you, I mean, uranium's a byproduct for you almost in the sense, sorry, you know what I mean? Yeah, it's not the same deposit, but it's a byproduct in the sense that lithium is where the value sits for your company. Claystone Lithium in Nevada, next door to Tesla's Gigafactory, and you've also got lithium down in Peru as well. That seems to be where the value is accretive to you. Uranium, not so much. So how do you play this market? Do you look to spin that out? Do you want to retain control of that? How do you time the market?
Yeah, it's a great question. We're certainly our Macusani project, uranium project, is lost inside American Lithium, and we're in the process of really thinking hard about spinning it out, retaining some control, obviously, but return of capital to our shareholders, this sort of model, and let it fly on its own. It's because it is a great project, but as you well state, it's an order of magnitude smaller than the lithium value proposition that we have in American Lithium with our two America's projects. But it's interesting because once people start understanding Macusani, our project, it's not all about grade. We have a low grade deposit. It's about economics, and we have a 5-year-old study that used $50 uranium as its pricing, and it's incredibly economic. Now, the price has gone south, but now guess where it is? It's $50 again. And at the time we put it out, everybody was using 65 as their base price. And guess what? A PFS just came out last week. They were using $65. Now people think it's going to be there. We don't need $65 for that project to sing. So.
Well, that's a conversation for another day, because we're doing a series called Low Grade is King, because it ain't just about grade. There's a bunch of other variables which we use for modeling, and that would be a fantastic conversation if you come and join us on that one. I'm just going to say I've got to ask Chris. I did ask it of Marc, but I didn't get Ted and Chris a chance to answer this. In terms of the big catalyst moments, is this just purely in the hands of the utilities, and when they decide that they can't eke out any more margin and they're going to have to place big contracts? And you're an explorer, so in a very meaningful way, you're kind of unbiased in this. But so can you give us your unbiased view of that?
Well, I think back to a point that Ted made earlier, the problem is this is an opaque market. I mean, what would ever prompt Cameco to start putting out their long-term prices? They don't have to, and they have no upside in doing so. So the fact is, the market really can't know, and it won't be until it trickles down into some of the smaller contracts that are being put out to tender that we're going to start hearing what those prices really are. So it's we don't get to get ahead of it. We only hear it in hindsight is when this stuff is moving. So it's tough. Maybe I don't have an answer as to what's the exact catalyst. I mean, it's all we really can watch is the spot. That's the only thing that's made available to us for the most part. We see the markets react to that every time the spot quivers a bit. The equities all take a run, and then when it doesn't hockey stick, they kind of get tired for a little while again. And I think this is going to be a more kinder and gentler rise than certainly we saw 15 years ago when things just kind of hockey stick and went off the roof. Because I think the spot price now is being driven, particularly with the Sprott fund buying into the spot market. It's become more of a real somewhat indication of supply and demand, as opposed to a hedge fund playing around with the spot price like it might have been 15 years ago. So I think it's just going to be a calmer rise as uranium becomes the balance between supply and demand kind of even out, and it will move forward. I don't think we're going to see that rocket take off like it did last time.
I see Chris finally mentioned the 800-pound gorilla called Sprott. So I would sort of take the other side of that and say, in terms of catalyst, we do have someone whose interests are very aligned with the spot price going up. And lo and behold, they have ways to sort of make it go up a little bit. And so the market is not quite as unaffected as you might expect. And so the other thing that it's worth mentioning every time you tell anybody about our little sector is the whole thing, after we had a rally and everything tripled, we got to 35 billion in market cap. So it's a sector that can get muscled around pretty easily by real money. And I think that's one of the attractive things that brings the hot money to it. So I think there's a bunch of catalysts, whether they directly impact on the spot price or not right away, that we have ahead of us. I mean, one of the obvious ones is the Russians so far have not played the nuclear power card. And, I don't see them sanctioning themselves, but could the West sanction Russian uranium and just blow another bullet hole in their other foot? They could. And then the other thing that I think that's sitting out there waiting to happen, I think it affects your backyard, is that, if the next gen thing gets put to bed in terms of how that's going to come out of the ground, and we've dealt with the fact that there's 20 million pounds coming at us sometime in the next 5 or 10 years, and then the market realizes we're still short, then I think people are really going to focus on these fundamentals about where is all this stuff going to come from in the future. And I'm very bullish on Greenfield for that reason, because I think all the projects we're talking about, like, Ted's project, our projects, the stuff that's going to market now, these are all legacy things that were found a long time ago. It's like the oil business. You better be drilling or you're going to be, everything starts running down the day you open the mine, right? So
yeah, and on the fast rise of the prices that we saw back in 15 years ago, it really, there were a lot of dead dog projects. I call them zombies because they come back to life. They were always dead. They should stay dead, but they didn't. And they took a lot of, I guess, good money with them.
Present company excluded, right, Ted?
Exactly. But what you're seeing is the serious people who maintained their track through the low price environment, doing what you could to survive and advance the project however you did it. Companies like ours, I mean, the collective us, we're going to benefit from this slow, steady price rise that seems to be happening.
Yeah. As the utility individual said to me, 50% of these companies will not ever produce a pound out of the ground. Happened before. I like that. Zombie projects. Brilliant. We like that. And there's lots of places we could go around price, around, whether split has or has not been a good thing for the sector, and, and what it's done there. But we are out of time. So, because I want to leave each of you with a couple of minutes to sell your own companies. I think these are 3 excellent companies at different stages of evolution. People should be looking at this. Certainly if you're a contrarian investor, get in now. Get one while you can. So Marc, give us 2 minutes on you, why investors should be investing in your company.
Well, I think the big advantage with Laramide is we're very late stage. We're going to be a prime beneficiary. I think when we get this political tailwind about actually getting projects built, we're moving as fast as we can to get them both in a shape where they're effectively as close to shovel ready as possible. And they're projects of scale. So we are very attractive, I think, to utilities when we go out looking for utility contracts. I mean, our one project in the United States, we basically could probably fund that out of the equity market to production. So we're on the process of just trying to get the final permit and then get that project ready to go. It probably needs $50. Our Australian project needs political will and probably a little higher price, but it's definitely going to happen one day. It's one of the more prominent projects of scale out there. And we have been around a long time, and I think people kind of, people know what they're getting, and they know we're committed to the space. And the insiders are big owners. We eat our own cooking, and I'm very bullish on the space. And I think it's a good time to get in. We've had a big correction. We're in kind of a 9-month correction. Like as I said earlier, the whole sector tripled off the bottom as the bear market finally did end. And then we've had a big pullback. Everything fell in half, and I think it's a pretty interesting time because unless you think the energy crisis is over, I think you want a little uranium in your portfolio.
For sure. Ted, give us your view of your company's key selling points.
Okay, so as far as the Macusani uranium and the potential to spin it out, we have a large project, over 124 million pounds of resources, and using $50, we thought we could produce uranium for $17 a pound, and that's cash costs including royalties. So incredibly economic. Outside of the best Athabasca projects, Kazakhstan and some ISR in the States, there's no other better projects. So it's going to be good. And once we answer the jurisdictional question of Peru and its support of uranium, not just with words but with the government actions, that'll be a really good catalyst for us.
And Chris, go on, sell the Athabasca Basin as if it needs to.
So easy. No, it's well, I know.
Or take us out with a song, whatever. I don't mind.
Well, it's my point earlier. It's our value proposition that we have to maximize the likelihood of a discovery, and I think we're doing that by being in the best jurisdiction on the planet, as we keep pointing out. The fact that we have 12 projects across the basin, all of them highly active right now, thanks to the funding that's available through the markets, and we have 2 joint ventures with 2 of the largest producers on the planet, Cameco and Orano. We operate those projects, and we get their continued support financially and technically, and we've done the hard work. All these projects have been moved along, either protected or gathered up during the downtime, and we're not picking up the leftovers. So we are we're serious about what we do, and I think we're in a good position to make that next big hit.
Brilliant, gentlemen. So Marc Henderson, President and CEO of Laramide Resources, Ted O'Connor, EVP of American Lithium, and Chris Forstad, President and CEO of PurePoint Uranium. Thank you very much, gentlemen. And to you contrarian investors listening, watching this, have a look at these companies. You couldn't do much better.